Hey everybody, welcome back to Wealthy Sailor. Today's a very exciting day for me because today I woke up, I checked the 4 apps I check every day, and I saw this. That's right, I just woke up to find out that I have an 800 credit score for the first time in my entire life. I've never really been that high before. The highest I've been before this were like high 700s before I took a really big drop. So this is really, really good for me. It's a big milestone. I'm really proud of it, and most of all, I'm a little happy because I hit 800 before my fiance hit 800, and she was getting really close doing it. So like that whole rivalry thing that we have going on, I won this one. So the purpose of these videos, I haven't really been updating you guys too much on my credit score, and the reason being is that one, I don't find it as exciting to really talk about credit scores over and over again. I'd rather talk about money and finances and have credit scores be kind of a small part of my personal finance kind of theme that I'm doing. The second thing is that at this point, there's not really anything I can do with my credit scores. I'm paying down my credit card debt, and that's really it. The rest of it is just the amount of time for some of my accounts to mature more. My average account age on one of it is 7.5 years, and on the other one, it's 5.5 years. So there's nothing I can really do about that, just wait. And I honestly don't think it'll be fun to open up a video with, hey guys, we're sitting here waiting for some time to pass so that I can go up a couple more points. So I just figured updating you periodically when I hit milestones and kind of brag a little bit will be kind of my method of explaining my credit report. Alright, so on to today's topic for the video. I want to talk about home refinancing. The reason this kind of came across my radar is because I'm still feeling the effects of COVID a little bit as a landlord for my property in Jacksonville. The issue is that I was trying to figure out how I could kind of insulate myself from the high payments in case my renter stopped paying, which they have not done, thankfully. So I was looking over different possibilities, and of course refinancing became one of them. So I was looking at different rules and stuff, and I thought I would share with you kind of some of the things I found out and why I came to the decision I made. So what is a refinance? So when you refinance a home, it's basically you taking out a new mortgage on that home and restarting the time over. And usually you want to accomplish one of 3 different things. One is that you're trying to do a cash out equity, and what they allow you to do is pull out whatever equity you have in your house in cash. This is not advisable. In fact, now that I think about it, nothing I'm talking to you about today is advisable because I'm not advising any of you to do anything. This is just strictly me telling you about what I've learned for entertainment purposes, stuff like that. So please, I'm not an expert. Don't take it as such. But you can take cash out. So let's say you buy your house for $200,000. You spend 10 years paying it down to $100,000 total. And in that time, it also went up $50,000, which means you can actually pull out $150,000 worth of cash out of your home and get it for whatever you want. However, your mortgage starts over, and since you took out more than what your house was originally valued at, your monthly payment will now go up. Number 2, you can actually lower your monthly payment. So, for example, if you take that same house for $200,000, you paid off $100,000 of it, so you only have $100,000 left on your mortgage. When you take out your new mortgage, your time does start over. So whether it's 15 or 30 years, the time limit renews. But it's now at the new price of your house, or the balance remaining on your house. So if you only have $100,000 left, your mortgage payment should be cut roughly in half. There's some exceptions because of interest and fees and stuff, but that could be very beneficial for certain people. And reason number 3, some people do it to lower their interest. This could be done for a couple different reasons. One, you just got locked into a fixed rate when the interest rates were high. 2, if you have an adjustable rate and you're suddenly about to hit your balloon payment, you could definitely try to refinance for a lower rate and try to get that 30-year fixed, so you're not stuck with these giant payments because for your first couple years they're so low, and now they're all catching up with you. Again, it does start your loan term over, but it might be a good option for you depending on what your situation is. Okay, so before you think about refinancing, there's some things you should take into consideration. One is your credit report and your credit score, because they will ping your credit again. It's like getting a whole new mortgage, and you're gonna have to make sure all your stuff's in order for that. If you're watching this channel, you probably have pretty decent credit because you're interested in finance, I would assume. If not, then go back to one of my videos where I explain these credit reports and work on that first. You need to have your credit good before you try to refinance. 2 is take a second to learn interest rates. One thing I like to do is I like to find out what the federal interest rate is, and it's going to be slightly above that. And when I say slightly, I mean like 2 points above that or so. And you can also find out just by going online and checking with different banks and stuff like that, kind of get an idea of what you're in the neighborhood of, so that you know what to expect when you start actually putting in applications. Number 3, before you try to refinance your house, take a moment and find out if your current mortgage has a penalty for you paying it off early. In my experience, they're not super common, but they're common enough that you need to make sure of that, because you could try to pay off your current mortgage early and suddenly have a $15,000 penalty tacked onto there. And if you do have that, you need to financially prepare yourself. So find that out before you even apply to refinance, so you know what you're getting into. The fourth and final thing you need to know before you start trying to refinance is that if your mortgage is under 12 months old, they might not let you refinance it. Generally, they like to see that you've paid off a little before they start doing the refinance thing. It varies with banks to banks. Like some of them I saw that will let you do it if it's under 6 months. But 12 months seems to be the average from my experience. So, just keep that in mind. Okay, so for the next part, I want to talk to you about the cons of refinancing. One, the most obvious, you're starting your mortgage over again. So unless you refinance for a shorter term, which you wouldn't, I don't understand why you'd really do that, but if you did, then that would be different. But let's say you go from a 30 year to another 30 year, your mortgage is starting over. Now, you have a smaller payment, or you took your cash out, which I hope you didn't, but you have a smaller payment, but you're still starting your mortgage over again. So I think that should be something to really consider, because if you're halfway through paying off your house, I don't know, I would kind of stick with just paying it off. But every situation is different. There might be times when you don't have a choice. Next, fees. There are a lot of fees with refinancing. A lot of times it's just like buying a house, where you have a lot of initial fees to pay up. And then sometimes they will tell you no fees, but if you read through the fine print, what they're actually doing is just tacking your fees into the total loan amount. So if you want a $100,000 mortgage, you might actually get issued a $105,000 mortgage, because they included the fees and taxes and all that stuff into the mortgage itself. So another con is interest rates. Interest rates can be both a pro and a con. In this case, it's considered a con, because although right now we have very low interest rates, in 2 years from now, if you're watching this later, who knows what the interest rates are going to be, and you could actually get stuck with a higher interest rate than what you're currently paying. This becomes especially evident when people want to take cash out, because they tend to take cash out at sort of unopportune times, and that's one of the reasons they take cash out, because it's an unopportune time. So they refinance, they cash out, and now not only do they have to pay all that money that they cashed out back, but now you're doing it at a higher interest rate. So please be very aware of getting a higher interest rate than what you were previously paying. Okay, and the last thing I'm putting in the con column is cashing out. I think it's almost always a bad idea to cash out your equity in your home unless you have something that either really needs it, or you have a really safe investment to put that money into. So just be aware. All right, so common reasons that people end up refinancing. The biggest reason that I've seen is that people just want lower interest rates. The interest rates, pretty much the entire time I've been a home buyer for the last 10 years, the interest rates have been going down, so it's almost always better just to refinance in newer times. Now, I bought my Jacksonville house about 7 years ago, but the interest rates were pretty low, and even right now, I can't really do much better. And the little bit better I can do isn't worth the fees that are going to be tacked onto it as of now, based on the math that I've done. But if you're paying a really high interest rate, yeah, get those low interest rates locked in. Another common reason is people use it to avoid balloon payments and adjustable rate mortgages. And in these cases, I do think that you should probably refinance into a 30-year fixed rate if you can. I keep saying 30-year fixed rate, and some of you might be like, oh no, get a 15-year fixed rate. And what I would suggest, and again, I'm not offering financial advice, I'm just saying this is what I would do. Entertainment purposes only, people. Entertainment purposes only. But what I would do is get a 30-year fixed rate, but do the math on what a 15-year fixed rate would have been, and I would just make those payments if I could afford it. But that way, if I run into trouble with something, medical bills, whatever, then I can cut back on the payments without going delinquent on the payments with my bank. So that's just what I would do. Take it for whatever it's worth. And the third most common reason is the reason I hate it's cashing out. Now, there are some exceptions for good reasons to cashing out, as I mentioned earlier. One of the big reasons people cash out is actually medical expenses. I kind of sucks that you have to, refinance your home just to pay for medical stuff, but people do it for that reason. Another reason is education. Some people want to take money out in order to learn something. Now, education I do think could be a good investment in yourself, so it might not be a bad idea to do it. I don't know your situation, but it could be okay. Another reason is investment. Some people like to take their money out and invest it in something else. And my opinion is, unless you have something really safe that's super lucrative, I wouldn't do it. I definitely wouldn't refinance your house to go buy like lottery tickets or gamble or anything. But some people do. And this is what I feel like is the most common reason people actually refinance their house. They see the amount of money that they can take out and they start thinking of everything they could do with it. A boat, a new car, motorcycle, whatever. And they take it out to splurge and to feel good for a couple days. And again, I really hate to be the guy to lecture anybody on what they should or shouldn't spend their money on, but I do think it's a bad idea, and I can only tell you that I would not do that myself. Okay, so some costs and fees that are associated with refinancing. We've already discussed a couple of them, but let me just go over what I was able to find out. First is the application fee. I don't know how much the application fee is, but that's going to be there, and I'm sure it's going to change with every bank, so just be aware that'll be in there. Title insurance. You're going to have to pay for title insurance again. You could have to pay attorney fees depending on what your title holding company is doing, and that can add up too, and this is all just added on to your refinanced mortgage. So don't think that just because you don't see any fees there, you really have to read the fine print to make sure that none are being added in there total. Sometimes you have to pay points of origin fees. I don't have any experience with that because when I bought my house I didn't have to pay any of those fees, but just know it is something that you might have to end up paying. Okay, just some end tips that I want to go over. One, I would like to remind people that in the end, for most people, your home is going to be your most valuable asset that you ever have. So if you're getting close to paying off that asset, just be cautious with suddenly undoing that and restarting, because it probably took you like years and years to get to the point you are now. So just be aware and really put some thought into it before you start that mortgage over again. And the last thing I say is just, if you do a cash out, don't waste the money. I know some people use it for fixing up their house, and that sounds like a great use for it because you're adding value back in your house, or at least theoretically you are. So that's not a bad choice. But otherwise, I'd be very cautious about taking money out and pretty much spending it on anything. Okay, so after doing all this research, I decided not to actually refinance my house, or at least not yet. If my renter stops paying for a long period of time, I would sooner probably ask for a deferment than for a complete refinance. The only way I would ask for a refinance is if something happened and I have to bring my monthly expenditures down permanently. That would be a huge disappointment for me because I only have about 22 years left on the one mortgage. So I'd kind of like to get paid off as soon as possible. Well, that's it for me, everybody. Thank you for stopping by to The Wealthy Sailor. I hope you learned something today because I learned a lot while researching the refinancing and the creation of this video. If you liked the video, you can go ahead and give me a like or a subscribe. Thank you for stopping by and keep saving.